Hello, everyone. Welcome to our webinar series on capital market development. Today we have two leading scholars to tell us about the dividend puzzle. And today we have an unusually short meeting because the last minute changing our speaker's schedule. So we'll have 20 minutes for Bohui from ZHAO Shenzhen to present his work, and it will be followed by 20-minute discussion by Xiumin Martin from Washoe St. Louis. So Bohui, the floor is yours. You only have 20 minutes.
Thanks, Michael, for the introduction. It's very nice to attend, present the paper at ABFER webinar series, and the paper co-authored with Xiaoqiao Wang, my colleague at ZHAO Shenzhen, and also Jing from Macau University, and he's also online, and Xiaofeng from Lingnan University. So let me show you something. Given that we are trying to talk about dividend in China and also understand the dividend issues and then ongoing. So let me show you what is the current dividend payment pattern in China. So from 1998 to 2018, we have number of listed firms increased from 850 to 3,505. And then we could check the number of cash dividend payers because they also have non-cash dividend payers. So the fraction increased from 31% to 71%. The good thing is this number increased, but the downside is that still you have 30% firm that didn't pay dividend every year. So especially recently. So in that case, we want to understand why some firms try to pay, why some firms try not to pay. So that is why Farmer French 2001 mentioned that dividends have long been an enigma. So it's a puzzle. We need to fix it. So normally there are four theories, main theories. So one is called agency. The second one is called bird in hand. The third one is signaling. And the fourth one is tax clientele. Four theories. Later on I will explain and what are the details of these four theories, okay? So to answer the question, which theory is more important to explain the dividend payment? Theoretically, relatively speaking, it's easy to pin down a theory, but empirically, to answer this question, we suffer the challenges. The main challenges come from endogeneity. And the one thing is like dividend policy and its determinant are determined simultaneously. And also you have some overlap predictions from the theories. And also you could have a reverse causality. So the key point is how can we fix the causality, right? So given that today we still do not have consensus on the determinant of a dividend policy. So in that case, this old puzzle of dividend may need a new method of resolving. So what is the new method? So here we try to introduce few experiment. And for this few experiment, we want to test the pronounced role played by one or several dividend theories. And what are we going to do? And we are going to bring concerns and queries on the frictions of a particular dividend theory because there are always a friction faced by investors, by the market. That is why the manager decide to pay the dividend or not, predicted by the theory. So in that case, we are going to examine whether firms receiving the treatment of the theory increase their chance to pay dividend in the following period. And then the experiment is run in China, in Chinese market. Definitely we have many reasons to explain why we run the experiment in Chinese market. And one important thing is that we have a platform, and using that platform, investor can communicate with the firms. And in that case, we are pretend our team members as the potential investor. They are going to communicate with the firms and to express our concerns and queries. And let's see whether their concerns or queries will increase the firms, the chance of dividend payment according to the prediction of the dividend series. So let me give you more details regarding the dividend theory. The first thing is agency theory. And because there's a conflict of interest between managers and the shareholders, paying dividends would reduce free cash flow and the minimum control. So that is why we want to pay. The second thing is that because investors are always risk aware and do not like uncertainty, and dividend normally represent a certain thing. In that case, will reduce investor risk awareness. The third thing is that if there's huge information asymmetry between insiders and outsiders, and the outsiders have no idea whether the insiders or managers or the firms are doing good or bad. So in that case, paying dividend will build up investors' confidence on this firm. The fourth theory is about tax clientele theory. And someone pay high tax for dividend payment, someone they do not need to pay high dividend tax. So in that case, a firm, their dividend decision will depend on the investor's dividend tax relative to capital gain tax. So they are the four theory, right? So let me show you what is the theoretical and the theoretical framework of our experiment. As I mentioned, that manager and the investor, they face these kind of frictions, agency risk aversion, information gap, and the tax cost. And we pretend we are the potential investor. We are trying to let manager know that investor have the concern on a particular theory. So for example, they have the concern on agency problem, have a concern on information gap, have a concern on tax cost. And after they have this concern, in that case, and we want to know whether the investor, manager, they are going to change their dividend payment decision. Why? Because they want to use this method to mitigate potential investors' concern. So this is our theoretical framework. Okay. So next, what is our conceptual framework? The premise of the fourth theory is that according to agency theory, managers have to perceive the threat from the shareholders because they have no incentive to pay out cash to lower their expropriation. So after they receive the information from investor worry about the agency problems. In that case, managers may increase their dividend payment to mitigate this potential threat from shareholders. The second thing is for the bird in hand theory. And if we tell the manager, indeed, we have the concern about the uncertainty of future cash flow, about the payoff, if managers are indeed worried about investors' this risk attitude, and they will think whether they are going to increase the dividend payment to mitigate this kind of friction, similar to signaling theory and similar to tax clientele. So the main idea, we pretend to be potential investors and communicate with managers, with the firms, let the firms and the manager know about our concern, increase the concern. And let's see whether if one theory's prediction is correct and such concern makes sense, it will affect their dividend payment decision. Okay, so let me show you our main results. The main finding is that although we test each of the four theory, agency and the signaling and bird in hand and the tax clientele, and only the first one, the agency theory, the treatment of agency theory, increase their dividend payment. And for other treatment, seems to not change Chinese managers' dividend payment decisions. And also, to make our story more convincing, we try to conduct some cross-sectional analysis and to split the firms into the group facing severe agency problems and face less severe agency problems, and split the firms with a stronger role of secretary of board, because we communicate with the secretary of the board, who is in charge of submitting the dividend proposal to the board of directors. And also we try to compare the several communication channels, sending message through the investor relation platform, send the email, and also give them a call directly. We realize actually the result is more pronounced when the firm facing severe agency problem, when the role of the secretary of board play a stronger role and is stronger, and also when the telephone communication is more effective. Okay, so in that case, let me show you what is our experiment design, because this is very important. And if you don't have a reasonable design, it's hard to test. So the main idea is over some period, the secretary of board propose a dividend plan. And in that case, board of director, over the meeting, they are going to talk about it. And then they are going to have a general shareholder meeting. And if everything is confirmed, they will make the announcement of the dividend plan. So we conduct a few experiments by contacting publicly listed firms in China. And when the secretary of board proposed the firm dividend payment plan, the main idea, before they propose the plan, we try to raise our concern. We pretend to be the potential investors. There are several channels to communicate with listed companies. One channel is called investor relations platform. For investor relations platform, we have Shenzhen Stock Exchange. They have easy IR, in Chinese called Hudongyi. And in Shanghai Stock Exchange, they also build up a platform, and it's called Shangzheng Hudong. So these two platforms provide an easier model, and the investor can deliver their concern, deliver their questions to firms. Okay, and also, according to the requirement of Chinese Security Regulatory Commission, firm must provide their telephone and email contact information on their investor relation web page, so we can send them emails, give them call directly. So we have 3 channels. Okay, so this is the example for Shanghai IR communication platform. This is a Shenzhen investor relation platform. And then, so given that we are going to focus on the Chinese firms, so let me show you what is our sample selection. At the beginning, we have roughly about 4,200 firms listed in China. And the experiment ran just by the end of March to the first week of May. And in that case, we have publicly listed firms, as I mentioned, 4,000, and we try to exclude those missing information, ST firms, B shares, and also they submit their dividend proposal early than our experiment period. And then in the end, we end up with a sample 2,500 firms, and we treat them as a final sample for the experiment. Remember that in the Chinese sample, you roughly have 70% of firms every year paying dividend. The rest 30% of firms do not pay dividend. In that case, we will compare the two groups, but the main analysis is based on this group, 1,800. So next, let me show what are our treatment groups, what are our control groups. And we try to randomize the full sample and the 2,500 firms, equally divide them into 10 groups. We held our undergraduate students in our class at the Chinese University of Hong Kong, Shenzhen. We asked them to pretend to be potential investors and contact each firms and according to some method and also a way of communication through the channels of online platform, email, and the telephones. And the execution time is from March 29th to May 7th, 2021. So generally speaking, only 5 weeks we run the experiment. Remember, we are not going to overload too much information and make our communication too aggressive. We only contact the firm through the 3 channels. AR platform, email, and the telephone call once per week, either is successful or not, only once per week. So in that case, a firm will receive 5 contacts from the AR platform, 5 contacts from emails, 5 contacts from telephones, in generally speaking. Okay. So this is our groups. Why we have 10 groups? Because we have 4 theory. Each 4 theory, they should have 4 treatment group. However, we divided each 4 treatment group into 2 treatment group. One is called the inquiry treatment group, and the other one is called the inquiry plus asking for dividend treatment. It means that once we write our communication details and information to contact with the company, and in that case, we try to imply maybe they have the concern on their agency problems, and then we don't tell them you should pay the dividend. This is one treatment. Another treatment is that we are going to ask them to pay the dividend immediately. In that case, for one theory, we have 2 treatment group. Later on, we are going to compare which one is stronger, whether it's mainly driven by we ask them to pay dividend. Okay. We also have a placebo treatment. For placebo treatment, we are not going to deliver the information related to or implied from the agency or enhanced Xiumin tax clientele theory. We are trying to deliver information on other things. And also we have a no treatment group. So we are going to compare, for example, agency theory group with this placebo treatment and no treatment. So it's in each group we have 256 firms, roughly speaking. Let's see whether
Bohui, quick clarification. Can you give us an example of the inquiry? How is it worded?
Okay, so here we have the example of inquiry written in Chinese. And so, for example, according to agency theory, and so we mentioned that if they hold too much cash, it will bring problems. And this problem include the over-investment and over capital expenditure and spend a lot of money. And then maybe you need to find some way to reduce cash. In that case, will increase the firm value. So this is one example. And for birth in hand theory, and then we will pretend investor, we tell them that we love certain things and we hate a certain stock price movement, and whether you can do something for us. And also, for the second treatment, we ask inquiry plus, ask for more dividends. And in that case, we aggressively ask them, what about you increase your dividend? What about you pay dividend? So this is our deliver information. Okay. And in that case, let me show you whether our sample selection is enough random. In that case, we compare the firms between agency treatment group and the control group to compare all these characteristics. As you can see, that the T value are insignificant, so they are always randomly selected firms. Let me show you our first finding. And after we conduct the experiment, we are trying to check the fraction of firms, their dividend payment per share in 2021 greater than theirs in 2020 to see whether our experiment is effective or not, compared with the control group. For control group, the increase was only 39%. However, for agency theory, it increased to 45%. There's no regression. I just show you the univariate analysis. Okay, this is a fraction of firms with their dividend payment increase between 2020 to 2021. Another thing we would like to check the fraction of the increase in the dividend payment per share. For agency theory, the average increase 26%, birth in hand 24%, and also signaling 14%, control group 11%. So this is higher. Without running regression, we are not going to feel very comfortable, right? In that case, we perform the regression. We regress a dummy variable. The dummy variable equal to 1 if a firm's dividend yield in 2021 is greater than that in 2020. So if there's increase, and then we will say this is equal to 1. There's a decrease, or no increase is equal to 0. And we have treatment dummy. We only check this 1 year, 2021's dividend changes relative to 20. Let me show you the main result. Relative to both enhanced theory, signaling theory, taxing clientele, the main answer is that firms receiving the agency theory treatment increase dividend relative to control firms, and no significant effects for other 3 theories. So what is the economic significance? The economic significance is roughly, if I remember correctly, is roughly about 10%. And once you include control variables, is 8 or 9%. So it's a good number. Okay. And also,
Bohui,
yeah,
2 minutes.
Yes. And also for the last part, we are trying to check the heterogeneity effect. And if our story makes sense, we should expect stronger results if the firms suffer greater agency issues. So how to measure agency issues? We use internal corporate governance measure. We try to split the firm into the exact payment greater than median, less than median, independent director less than median, and greater than median. And you can see that, and the result is more pronounced for firms that suffer greater or severe issue of internal corporate governance. Okay, this is the first. Second thing is that we also check external corporate governance. So we found that the result is more pronounced if the firms have less analysts and also less institution ownership. The second heterogeneity test, we want to pin down whether it's due to the theory imply them or providing implication. And then in that case, the firms, they are trying to increase their dividend, or because in the another treatment, we ask them to pay the dividend. And then when we make the comparison and we find out it's not due to the effect we ask them to pay. It's just when we bring out the concern, and in the end, they are going to pay the dividend to mitigate this concern. The third part is about the role of a secretary of the board, because secretary of the board play a very important role serving as the bridge between the firm and the investors. So we expect the result will be more pronounced once the firm has more secretary of the board, and if the secretary of the board are paid higher because they receive more respect from the firm. And also, if the firms, they have other communication channels, or current communication channel effectiveness will be weakened. And then all these findings are consistent. The last part, as I mentioned, we want to compare which channel is more aggressive, more effective communication. First one, we could create a dummy variable. If we have a successful telephone communication, if it is equal to 1, if no, is equal to 0. If we have an online investor relation platform queries response from the firm, this is equal to 1. We have one email response from the firm, this is equal to 1. And overall, and we found that actually for the telephone communication, it will serve as a very important channel through which our treatment event of agency theory occurs. Okay, so the conclusion is that we conducted a few experiments. We found that past pairs paying the treatment agency theory experienced an increase. And then other theories seem to not experience a significant change in dividend policy. And we believe that the agency cost motive is more likely to be the main determinant in this firm's dividend policy. So I will stop here and then look forward to Xiumin's comments. Thank you.
Okay, thank you, Bohui. I found the results very interesting, but let's hear how the experts think of them. Xiumin, you have 20 minutes, please.
Can you see my slide?
Yes.
Okay, good. Well, thank you for the webinar series to invite me to discuss Bohui's excellent paper. I always think highly of Bohui's work. And today I got the chance to discuss his paper, even though I mentioned I have never done dividend paper. So just to take that as a grain of thought when I provide the comments, hopefully they're helpful to improve the paper. So with that in mind, I just go directly to what Bohui's paper does, and then provide comments. So the summary is, so the paper is doing the horse racing, studying which of the 4 dividend theories apply to the Chinese firms. And the 4 dividend theories include agency, signaling, tax quantile, a bird in hand, and they did the field experiment methodology. So by messaging firms from investor perspective, and the findings indicate that agency cost theory is supported, and the results are stronger in the cross-section for weakly governed firms and opaque firms. So give me an overall assessment of the paper, and I think my colleague Zach Kaplan's 2021 JAR paper seems to be a good kind of a motivation for me to indicate my overall assessment. So by looking at their table 1, this is so my colleague's paper, that JAR paper, studies cross country. So their question is about whether the country's institutional strength or weakness affects the firm's dividend payout. And you can see in this highlight in this red box I highlight here, China has weak institutional quality compared to the U.S. and, the second row versus the third row. And then you look at the third column, they present the speed of adjustment, and China has a really high speed of adjustment compared to the U.S., right? And the overall, looking just about eyeballing this table, my takeaway is the dividend payout in China is important. And dividend payout is volatile because of the speed of adjustment is high, therefore it's worth studying. And I think currently this is to me is a very good reason to study this market. I think currently, Bohui's paper, mainly said this is a field experiment. We get the opportunity to do the experiment to distinguish these, from the empirical side. But I think just the conceptual and the facts suggest that this is an important market to study this issue. Is a big issue. And my main comments, are in 5 aspects. One is about the background on the payout policies in China, which I think is a little bit lacking in the current version. And I also want to talk about the experimental design, if there's any alternative explanations. And the third one is about the mechanism. The fourth is the empirical analysis. Even though they did a really wonderful, extensive, and very thoughtful analysis, I have nothing to say about that. I just gave a little bit thought there. And lastly, it's about the external validity. So first comment is about the background of the dividend policies in China. I think China's capital market was founded in 1993, and compared to the U.S., it was young market. And over time, the policies evolve, right? And I'm more interested in their dividend policy. So what I see, these 3 boxes represent the key changes in their policy on the dividends. So in 2006, their corporate law was revised, and then they mandate the disclosure about dividend. This is about the dividend disclosure in the corporate law and corporate charter. And then in 2008, and they revised the dividend mandate requiring certain firms to provide dividend distribution. This is what I call a quasi-mandate for dividend. Okay, you think about, you look at these bullet point, external financing require at least 30% cumulative dividends on the average distributable earnings in the past 3 years. If you seek external financing, you got to pay in the past 3 years. You got to meet the threshold. So by reading these policies, I think just what came into my mind, they use dividend yields in their empirical analysis and the field experiment design. And I think it should be focusing on the average distributable earnings as their main measure because of this policy. Explicitly use this measure. And then in 2011, they required the IPO firms to provide detailed disclosure. This is another disclosure policy required by the central government. Okay, so what I think that the paper should give us some background about these key policy changes for readers to understand their findings, right? Without these policies, I kind of take what happened in the U.S. There's no mandate for dividend payout, right? So just to think about it, provide some background, provide some key policies revolving the dividends in China, and discuss it in the paper that gave us some understanding of an interpretation for a results. Now, I just quickly pull out the Chinese market data from CSMAR, and if you look at this left panel, this is about the dividend in China, and the right panel represent the firms in the U.S. Okay, I use Ronnie's graph when he taught the PhD class here. So the left hand side, if you look at it, this the left y-axis represent the number of firms that paying dividends, and then this right y-axis represent the percentage of firms paying dividends. You look at over time. I know Bohui already showed nicely the table. I just plotted. You can see that there's a drop immediate before 2000, and then suddenly increases in terms of both the number of firms, in terms of the percentage, right? So this is a kind of it's consistent what you show in that table. This is also consistent with these key policy changes. The dividend is not purely voluntary. This reflects some important component of quasi-mandate. And then you look at the U.S. dividend, the blue line. It's very smooth. This is the percentage of firms paying dividends. It hovers below 40, right? Pretty stable over time. And then other lines incorporate the repurchase. Repurchase in China is rare, and particularly in the early years. Okay, dividend is their main channel for payout. Therefore, I think Bohui's paper could discuss these nuts and bolts and give us a better understanding of the policies in China. And this is kind of the policy, the dividend percentage of dividend relative to their earnings. So the y-axis represent the payout ratio, the dividend relative to the earnings. And you can see that the gray line, the top gray line represent the payers, and the black dots represent the overall firms. So in the earlier years, there's a deviation between the two lines that suggests that there are a lot of non-dividend payers, but in the later years, these two lines trapped pretty closely, right? And it seemed like the number of firms paying dividends stay fairly stable. So those are the facts that I think Bohui's paper could discuss to give us some rich understanding of their institutional background. And also, I think their paper could benefit from discussing some literature on the dividend policy in China, which I didn't see much discussion there. For example, there's a paper by Chen et al. 2012 RFS paper. They study, even though their paper is mainly focusing on split share reform, how that affect corporate governance. But I think as a kind of outcome measure, they use the dividend as an indication of corporate governance has improved after the split share reform, and therefore dividend payout is increased. Okay. I think their paper is consistent with the agency cost argument, and this will be very relevant to the current paper. And there's another paper about signaling stories, WANG 2014. It's published in a Chinese journal. They show that the IPO firms use the dividend in their corporate charter to signal their firm type. And I think they found some evidence consistent with this argument. There's also text paper. I remember Oliver Zhen Li wrote a paper published at JFQA studying 2015 that reform, right, individual income tax reform, and that also I think is relevant to discuss. These are the main papers I found studying Chinese firms' dividend payout, and I think very relevant, should be cited. So my suggestion in summary is there's more discussion on the evolution of dividend regulation in China, and there's more literature based on Chinese firm. And so these will provide a backdrop for the current study. Now I'm going to move to my second comment. My second comment is about the theory treatment. Just now, Bernie asked about how you phrase these treatment messages, right? So basically they have 4 theories to differentiate, and then they have, you see the second column, I focus on the English translation. You look at the second column is their English version of the theory treatment message, and the third column include those theory plus they call it inducement or induction, right? Push firms to pay dividends. And then the second column focuses on the push group that is already dividend payer, and the fourth column focus on those non-dividend payers. So my comment here is whether some alternative explanation of your results could be possible. So for example, you phrase the theory treatment for agency theory, you phrase it this way: a firm's managers are more likely to overinvest or overspend when the firm has too much cash. And then look at the other 3 other theory treatment message. You quoted, I like cash dividend because they gave me a sense of certainty. So to me, compare these 2 messages, the first message appears to me more neutral, representing average investors, whereas the second theory treatment message represent more individualized. I is the investor. So maybe just from a psyche point of view, that firm may treat the first message more seriously compared to the second message. Will that kind of induce some differences about the effect? Okay. And then the second one is how the first theory treatment can be different, or how different they are from the second treatment that introduce call treatment. For example, you look at the first theory treatment. I highlighted here in the circle, in the red circle. You said reducing its cash holding may improve shareholder value. This seemed to me like this is pushing the firm to reduce cash. Potentially, that can be the dividend payout, right? And the second the third column, you look at the theory plus call treatment. The call, what the difference is by adding this last sentence, should the firm increase cash dividends? To me, that's seem to be minuscule compared to two messages, and therefore I don't see too much differences in the effects, because in my view, the first theory treatment already introduced some induction sense, or some sense of induction, right? Pushing the firm to pay out dividends. This is something to think about. This is just my personal opinion. And then how to potentially fix the issue I just now talked about. Potentially in the first theory treatment for agency theory, you could say, I believe the firm overinvest or overspend. So this is put the I in this message to make it equivalent or on the equal footage as other theory treatments. Or, or change the wording of other theories. For example, you don't use I like cash dividend. You could say investors like cash dividends. So to make it more, parallel to the first theory treatment message, right? So anyhow, I feel like a differential treatment theory message could induce the findings and explain your findings. Okay. My third comment is about the mechanism. So as Bohui just now talked about, they did how to deliver the message. They use phone calls, emails, and the text message through the board. And but they didn't talk, or I have no clue about what the response rates, right? How many respond to the calls? How many responded to the emails? How many responded to the text messages? Do they all kind of replied? I think you have a dummy variable to represent, at least one responded, but I would like to get a better idea about these responses rate. And also I want to understand the student. You said you use the university students to send the message or send the email. Are they using university account, or they use their personal accounts? Because using the university accounts potentially can be treated as maybe this is they know that some researchers use them as doing these research related. They may not be treated very seriously, right? And also, in terms of the phone calls, I know you have a script for the students to read from, but how did they introduce themselves? Do they behave more like investors, or they behave more like students? These discussions provide more textual information that can help us to understand and interpret your results properly. And my comment 5 is about the external validity and caveat. So I feel like the paper has a broad implication for the countries that may have a weak investor protection institutions. I think the paper can benefit from discussing these external validity and furthermore may kind of add a caveat to those non-results, right? Don't find the results supporting the other three, but doesn't mean that they don't exist. Maybe because they're a small sample size, or maybe because of other issues I just now talked about. So anything that you can provide in this regard, just to soften the wording a little bit, that may make the paper even more acceptable to the top journals. And also feel like the paper could also discuss some let me see. I have, sorry. Yeah. Also, the paper may also benefit from thinking a little bit uniquely, what is unique in China. You do the empirical cross-sectional analysis using executive pays, independent directors, analyst coverage, institutional ownership. I think these variables are frequently used, but they are kind of like universal, right? It apply to the U.S. firm, apply to European, apply to Chinese firms. But in China, my sense is the agency conflict mainly reside in minority versus majority shareholders rather than manager and shareholders, right? So could you kind of use some agency measures that potentially capture the conflict of interest between the two groups? For example, related party transactions, state ownership. These to me are more kind of bring in Chinese market uniqueness into your study. And I think, which can further enhance the quality of the paper. So let me, just, give a summary of what I read about the paper. And I think the paper is very well done, very thoroughly done. It's a very important topic. And I encourage the authors to think about, to provide more background of the Chinese firm dividend policies and also consider the possibility of the wording of the message, in your theory treatment and whether those differences could potentially cause the findings, and also discuss a little bit more about the external validities and what are the kind of the punchline for a reader to read your paper and walk away. Very nicely done. Thank you very much.
Thank you, Xiumin, for your very thoughtful discussions. Bohui, I know you probably need to leave soon, so would you like to give a quick response?
Yeah, thanks so much, Xiumin. I benefited from your previous discussion on another few experiment paper. So this discussion is as excellent as the last discussion. Thanks so much. And then appreciate your comments regarding the providing more policy background on the Chinese dividend payout market. So this we can do. The second thing is that we can cite Chen et al. 2012 and also signaling paper 111 and Zheng Li's paper on the signaling agency and tax. The third regarding the wording, indeed this is the key part. And if the wording does not deliver the key message implied by the dividend theory, and then it means that we are going to test something wrong or indirectly or incorrectly implied to the theory. So this is the key part. We need to be very careful. So that part, actually, we try to have several versions of the communication. So for the example, we illustrate is one version, and then when the student or RA communicated with the firm, they also try to have some variety of words. But I definitely have to say that there are still some issues. When they contact, sometimes they say I, sometimes they didn't say. So in that case, it may introduce some variation, but to some extent, on average, we feel that the wording across the whole theory will be similar. But for that part, we will be very careful. And also regarding comments about the response rate, and for AI platform, the response rate is way higher because according to the Chinese regulation, so the firm in principle issue the response. But for the email response rate is way lower. For example, we also run another experiment in the US market, and then the response rate is less than 4%. And then for the telephone rate is higher. So when students they use not university email box, they use outside the Gmail and whatever other commercial email box, and they pretend to be investor. But when they hear the voice, they are students. They can hear that the potential investor are very young, but that will introduce some issue as well. And also, I fully agree with you. We need to have a strong part for covenant. Although we show that the agency result is stronger, we don't want to be too aggressive to say other three series are not successful. We just say agency series is more pronounced. We need to be very careful, but in our heart, we still think that at least agency series is pronounced in Chinese market in driving the dividend payout decision. Others are just not pronounced, and we cannot reject they are insignificant. And also, regarding the alternative variables of corporate governance, like related party transaction and state ownership, we will take care of it seriously and then introduce some Chinese-based variables of corporate governance. Thanks a bit. Yeah.
Thank you.
Bohui, just a last comment. I think it will be really helpful if you can provide some deliberation about why agency theory is supported in China, but other theories are not. Just ex ante provide some, maybe these quasi-mandate just weeds out or crowd out the signaling necessity. I don't know. It's just something to be provided there that, again, help us to understand
we should add that part. But now I can give you a quick answer. Is indeed the current Chinese market, as you know, that is always around 3,000 points index. Everyone complain that how comes the index value is always very young, keep at 3,000. One of major significant reasons is due to corporate governance and due to the corporate governance between large shareholders and small minority shareholders. And I will stop here. Look forward to other comments and suggestions.
Let's open the floor. And especially when Bohui is away, his co-author Jing is here, right?
Okay. Bernie and I both have questions. I'm going to jump in and directly and ask my very simple question. And I think it's this great paper and a great discussion. I share the same view as Xiumin's, one of the comments. I feel like the wording, Bohui, when you guys, I look at the examples in the paper and the ones you showed us, for instance, if you look at the page 80, the appendix, the wording, when you send those comments, it says, 董秘考虑一下增加现金分红, question mark. And it's a way of asking question that's a bit aggressive. And then for the example you showed us earlier, 董秘要不要? I normally would say 要不要, yes or no, but then what you showed us is 要不增加. It's like I'm questioning you. Why didn't you increase dividend? I just feel like those wording, this very subtle thing in Chinese can make the respondent a bit pressured in some way. I don't think you're not gonna redo this again, but then I do, feel there might be some impact on the result.
My turn? Xiaoyan, have you done?
I'm done.
Okay. I want to make 3 points. Number one, I know the time is I know we have time constraints, so let me be quick. Number one, Bohui and your co-authors, please pay attention to the biases you may have in excluding some of the firms. Number two, please pay attention to the dividend theory is context dependent. The expectation of the shareholders in SOEs and the private enterprise would be different. You need to pay attention to that. Number three, you really need to pay attention to validating your research, your questions, which both Xiumin and Xiaoyan have mentioned. By the way, I really enjoyed the presentation and the discussions. Thanks to all of you on that. Number four is that you really have to go deep on the theory. Let me ask you this question. Let's ask ourselves this question. When it comes to, let's just focus on the agency and the signaling thing. In the agency direction, we worry about free cash flow. So what we want to do is to pay dividends, to say that no, we are not going to play the management will not play the free cash flow game. But there's another agency problem. There's another information asymmetry problem, which is about theoretically, if there's no information asymmetry, I will not pay dividends if there's really high internal rate of return. If my internal rate of return is better than the shareholders' rate of return if they invest after they receive the dividends and all these tax treatments together. So how do you differentiate the clientele, the signaling, and also how do you differentiate? Let me try to recall your 4 category. How do you differentiate the agency, the signaling, and the tax clientele and the birds in hand? When you think deeply, you find out that they are not that easily differentiable. Okay? I will repeat. I have money. I will pay, I'm the management. I pay money out because I want to signal that there's no free cash flow problem. At the same time, if I have a good internal rate of return, I don't want to pay dividends. So you need to really carefully address the demarcation of the quote-unquote theories. They are not that easily separable. Then, since you're saying the puzzle, you have to identify what's the puzzle. In my example, the puzzle is, should I or should I not pay dividend? Should I signal that I have no free cash flow problem, or should I not pay dividends to signal that I have a lot of internal use of money? That to me is one of the puzzles. So you have to pin down very sharply what you mean by puzzles. Thank you.
Yeah, thanks, Bernie. So yeah, let me quickly respond to Bernie's, especially the last one. This is very important. As we know that regarding dividend payment, there are many theories that drive the outcome, and also in addition to the dividend, the agency signaling tax clientele, and also others, and then there are fundamental reasons, internal rate of return, and also financing cost and investment opportunity. I fully agree that will drive the firm's dividend decision. And then that is why this is the main idea. And we assume that there are 2 firms, A and B. And A and B, in principle, they are identical. They are just identical. And we can do it because this is pure experiment. And for A, you are going to add some small shock to make manager think that investor worry about their agency issue. And then firm B will not have such small shock. And if the agency theory indeed imply that they are going to increase the dividend payment because such increase the concern, and they are going to pay that. This is the expectation. But definitely there are many issues to drive this outcome. This is the purpose to introduce this experiment, and also to make sure that it will not be affected by all alternative and underlying factors. And but definitely it will rely on the effectiveness of our wording, as also you third point mentioned that we have to be careful, and Xiaoyan and also mention that part. For this part, let me share my slides again. So like Xiaoyan mentioned, like, and we ask your company, what about you just pay dividend? And what about you just increase the dividend? It makes the tone too strong, too aggressive.
Why not?
And this is, I agree, because why we design in this way? Just because like, at the beginning we worried about if we don't add the word, they are not going to increase the dividend payment. But later on, when we compare these two groups,
let me make a quick suggestion to, sorry interrupting you, but let me make a very quick suggestion. What we all are talking about is to validate your questions. So it would be very useful to pose the same questions and to see how the management react and interpret those questions. The question is validation.
Yeah. So this is very important to validate this question and to see whether indeed the manager thought. At the beginning, we thought we should do a questionnaire And as a other field experiment they are doing, and then to validate those questions. But later on we figure out it will also deliver some information. And for this part, we have one additional result not presented in this slide. Is that we conduct a survey, and 2 years after our experiment, we ask the managers of the secretary board, ask their opinion, how they think about, what do they think about their feelings about the agency issue, both enhanced theory and signaling theory. We found that our treated group have some long-lasting effect on the managers' concern regarding investors' wariness about the agency theory. So let me try to, but unfortunately we didn't incorporate this survey at the beginning of the experiment to pin down it is the case. This is also one of the components I have to say. And also come back to Xiaoyan's point is that, and as you can see, like although we asked them to increase the dividend payment, but for both enhanced signaling theory and tax clientele, although you aggressively asked them to do that, but they still didn't do that. So anyway, so this is also indicate that relative to both enhanced signaling theory, tax clientele, and the agency theory seems like play a relatively stronger role. And also regarding Bernie's comments on the potential bears and also the context dependence, this is something we have to be careful, and we will put it in the potential comments. Thanks. Yeah.
Thanks, Bohui. Before concluding this extremely interesting webinar, let me provide some comments from someone like me outside accounting and finance. First of all, I feel very surprised to see the results. It's a total surprise for me to see, by calling someone, and you can actually push up the rate of dividend payment, the likelihood of dividend payment. That's very surprising to me. How could that be possible? I mean, let me just try to relate my question to what Xiumin was asking about what we learned from this Chinese context. If you think about state-owned enterprises, why they could be, influenced by a few phone calls or a few emails, very surprising. It could be the case that some private firms, they're really concerned about the PR. And then, once they receive emails, they're worried. Once they receive their phone calls, all those SOEs who are, somehow involved in anti-corruption investigations, they're concerned about the overspending, they're concerned about the overinvestment, and somehow they receive some phone calls and they try to relay these phone calls to, the ongoing investigations or whatever, So it's, if you think about it in one way, then the Chinese firms should not respond to those phone calls at all. And if you think about it in other ways, then they probably will be oversensitive to these phone calls. So I want to understand a bit more about that, but I understand, it's just a comment from someone who doesn't know anything about this. And also, Xiumin's question about the distributable earnings, so that sounds very interesting. So why don't you use that one possibility is, are you guys thinking about, distributable earnings do not make sense at all, because this is also something that can be manipulated by listed firms. If they do not want to pay dividends, they can just manipulate, what should be, counted as distributive earnings. So that's why we don't use that. So these are my comments.
Okay, thanks, Michael. And for the second one, let me respond. And for the distributed earnings, and we didn't thought about it at the beginning, so we can easily add that as the denominator, because we try to use dividend per share, this absolute value. We use the price as the denominator. Definitely, we could also use the distributed earnings. This is one thing for sure. And to increase the robustness of our evidence. Regarding your first question, I share the same opinion, and we share the same opinion. We thought, it's indeed quite surprising and encouraging. Through some calls, you are going to help the firms to increase the dividend payout. You can, one interpretation later on, we figure out is just our investors seldomly give the pressure to firms, and the firms feel that they are not greatly monitored by outside retail investors. As retail investors, if you pretend to be more aggressive to contact the firm, they may feel the pressure. And also we can check, and retail investors, they never attend those shareholder meeting, although they can do it online, but the attendance is very limited. So it means that we need something more activated
one sentence.
And from them to push it. Yeah.
On the exchange, all the posts you post there, the exchange get to see them. They see them. All right.
Everyone sees them.
Yeah, they can see
it. Phone calls know that they see them, and then it means like investors are asking for this. And if the firm does not respond, the exchange might think there's something wrong with the firm.
Oh yeah, investor can see it, other can see it, the exchange can see it. But my point is like the previous investor did not provide enough pressure on the firms. So once that is why we just give them a call and send them an email. They feel the pressure. Okay. Anyway, I have to stop here.
This actually says something really quite dangerous. We do something in the exchange and the firms will act. And this something that we do is random. It is really scary. I am scared of that. You think about it, right? Someone posts something on the exchange and everyone can see the firm will act.
The exchange will also monitor and filter the things that they don't want to see.
Sorry, guys.
Yeah, you gotta go. Go.
Because I have to leave due to another event I have to chair. Thanks a lot for all the comments.
We have done a great job. We're convincing Bohui to stay here until the end of this. Thank you very much. So before the last thing I want to announce is next month on January the 18th, we will have Li Bo from Peking U to talk about bankruptcy court in China. So thank you again for your great participation. I learned so much from today's presentations. Thank you all, and look forward to seeing you all again in the future.
May I add one response to the Bernard's question?
Oh yeah, sure. Go ahead.
So Bernard mentioned that he was worried about why we have such an effect. So in fact, we didn't, maybe due to time constraint, we didn't present it in the slides. But in fact, we consider two different decisions. One is the company who doesn't pay dividend in the past that initiate dividend. So we call them non-payers. Can we influence their initiation decision? And the answer is no. And the second test is that we consider the companies that already have a dividend payment in the past, whether they change how much they pay. And the answer is yes. We can influence the second group. So maybe our effect holds, but to some extent it's limited to affecting firms that have already been paying dividend in the past. So if the companies, they have been doing very poorly in the past, maybe due to their earnings is bad, they don't have dividend. For that group, our experiment cannot motivate or induce them to initiate dividend. So this is one additional response to your question. Thank you.
You're giving me observation. What's the economic interpretation?
Interpretation is that companies, when they make a decision, they try to some extent cater to investors, make use of the investors' information. So if such decision they can control, they have discretionary power over that, then they can slightly change that. So this is why they will change, which is increase their dividend payment. Suppose they have already been doing that in the past.
But doesn't that reinforce Michael's puzzle? Why would there be such a big effect? Just anyone said, maybe you have two groups, one react, one doesn't react, but if a significant group react just by some phone calls or some messages, it is scary.
Right.
That's the puzzle.
That's a puzzle.
It's not puzzle, but I just say that I find this first, it's a puzzle. Second, if this observation is valid, it's very scary.
I see your point. Yeah, I see your point. Maybe after this experiment, the companies will they will learn from such experiment. In the future, they will respond less to such kind of questions they received if they know this paper.
My reading of the value of the paper,
Bernie, there is a paper by Charles Lee on those investor interactive platform. And over the most recent years, there will be less use of those IIPs. And like you said, the exchange watched and monitored and filtered all the questions and responses posted on the IIP. Is that scary? Well, in China, people's opinion are very, very important. And so especially when you post on a public platform that exchange have access to, and they take it very seriously. And if it's not taken care of by the firm carefully and seriously, there will be real consequences. But anyway, I gotta go. I can talk to you a little more afterwards. This is, a little bit different in China. Okay. Okay. All right. Thank you.
Thank you.
Michael,
Thank you.
Back to you.
Thank you.
All right. Thank you. Bye-bye.
See you on the 18th.